What's up, my fellow What's creators? Matty Ice here. In this video, we're going to talk about what I believe is one of the most underrated benefits of dividend-paying whole life insurance that doesn't get talked about nearly enough, if at all. It's oftentimes also very conveniently left out of the narrative, the story, etc., by these influencers that hate whole life insurance and say it's a terrible investment. You should avoid it at all costs. And they make these blanket statements about how awful it is, and you should you should buy term and invest the difference, as if we can't do both. We can't I can't have whole life insurance and make investments and build wealth. Well, actually, you can. I do it all the time. Anyways, I just think it's a disservice when all of the benefits aren't discussed, because how can you make an informed decision about these things if you don't have all the facts, if you don't understand how they actually work? And what you're going to see, guys, by the end of this video is how powerful this one benefit is. And it has absolutely nothing to do with internal rate of return or building wealth. It's about peace of mind. It's about having access to financial resources at one of our greatest times of need. If we were to get sick, basically diagnosed with a chronic, critical, or terminal illness, our policy can literally come to the rescue. This could mean the difference between life and death. And bankrupting your family or not. And I'm not exaggerating when I say that, guys, because I'm going to give you very specific real life examples of how this benefit has saved lives, has saved a very specific life. It's a story that one of my mentors talks about on his channel all the time. And it was very surreal that I actually got to meet. I had the privilege of meeting this gentleman that was the beneficiary of this very specific benefit when he should have passed away a long time ago, according to the doctors, right? But this benefit allowed him to get access to significant financial resources to get the care that he wanted and he needed outside of the traditional healthcare system. He would not have been able to do that without this specific benefit, guys. So I'm not exaggerating the power of this benefit, and I just want you to be aware of it. A lot of people are not, and if they are, they don't really know how it works, and it can be incredibly powerful. And I can't tell you the peace of mind that it brings to you and your loved ones, the family, etc. When you have this. I know it because I have 2 policies of my own, and I sleep even better at night knowing that if, God forbid, I was diagnosed with something, like cancer, for example, if I were to have a stroke, heart attack, something like that, then I have access to a lot of financial resources above what I've put into the policy to get the care that I need, guys. So anyways, let's go ahead and hop into it. All right. And we'll break this benefit down. It's basically the illness riders, guys. The most underrated benefit of dividend paying whole life insurance, because people are oftentimes so fixated on rate of return and building wealth and stuff, which not necessarily anything wrong with that. It just shouldn't be the primary determining factor of our financial decisions. Do we want to consider it? Sure. But this is like completely outside of that. And I talk about on my channel all the time about how I use my policies to build wealth and actually accelerate the wealth building process, implementing infinite banking. All of that is great, but guys, this is such a freaking amazing benefit, and it's given to us usually free of charge as well. So, but let's break this down. What are these illness riders? All right. They basically allow us to accelerate a large portion of the death benefit within our policy if we get diagnosed with a chronic, critical, or terminal illness. Now, a couple of disclaimers here. Not every policy does this. Not every company offers these particular riders. So you want to make sure you're working with the right company and setting up the right policy. We usually work with mutually owned life insurance companies, set these up for high cash value, et cetera. And they normally provide these riders free of charge, right? But not every company does. Not every product has them. So make sure, or like sometimes certain companies or products will only have 1 or 2 of them. All right. So you just want to make sure you know which riders you are available to you, depending on the company and product that the company you're working with and the product that you're getting. So keep that in mind. All right. But essentially, we're able to accelerate that a portion of the death benefit. How much we're able to accelerate will depend on what we get diagnosed with, obviously how much death benefit we have. So the longer we fund the policy, or the more we fund the policy, the more resources we'll have access to later on down the road. There's not like a set number that you need to do this with. I'll show you an example of an illustration here, a real life, actually not even an illustration, a real life policy I just set up for a family member of mine to give you an idea of what the numbers could look like. All right. But it's all based on your death benefit amounts at the time of diagnosis. All right. What does this mean? All right. How does this actually give us benefit in our lives? Well, first off, we get access to resources above and beyond what we put in. All right. So if I put in, actually, you know what? I'm just going to give you an example right here. This is a policy that I set up for a family member. This is the breakdown of the chronic, critical, and terminal illness riders here. The critical part is for this particular company, they call it specified medical conditions, heart attack, strokes, etc. Chronic would be like if you can't perform 2 of the 6 daily activities of living. And then terminal illness, it varies from company to company on how they treat it. But if your physician gives you a maximum of like 12 months to live, for example, that would be considered a terminal illness. All right. But here's a breakdown of the values and what would like the amount of death benefit that would be accelerated depending on the year. So let's say that he's been funding the policy for 10 years. Up until year 10, he's put in about $69,000. So he's doing a $25,000 front load in the first year. If you guys want to break down on policy design, leave a comment down below and I'll send that to you because you want to design these policies in a specific way for high cash value. But he's doing $25,000 the first year and then $5,000 per year after. So by year 10, he's put in, I believe it's like roughly $69,000 it was. And if he were diagnosed with a chronic illness, the max lump sum advance of the death benefit would be $121,000. So that's quite a bit above and beyond what he's actually put into the policy. And he would still have a remaining death benefit as well. You don't even use up the entire death benefit. And this gets passed on to the beneficiaries, income tax free, completely avoids probate. So you're still passing on financial resources to your spouse or your kids, your family in general, whoever. Right. So it's really, really powerful. If there was a specific medical condition, max lump sum here would be $89,000. So about $20,000 more than what he put in. And then terminal illness would be the most, obviously, $142,000, almost double what he's put into the policy to get alternative care that health insurance won't cover. Maybe he wants to travel the world, create experiences with his family. Maybe he wants to use part of the money to get his affairs in order, whatever. Just having access to those financial resources, guys, like how do you put a price on that? How do you put a rate of return on that? That is so freaking powerful. And, it's easy to get caught up in the idea that, when we're young, so like at this age, he's only 44 years old. Oh, he doesn't need to worry about that. Actually, yeah, you do. Because it can happen to anybody at any time. Is it likely? No, but it's just the same thing. Like you're not likely to get into a car accident, but when you're driving, we still have car insurance. Your house is not likely to burn down, but we still have homeowners insurance and fire insurance, whatever. Okay. It's not that these things are guaranteed to happen. We're addressing a potential risk here, a potential catastrophic risk, and preparing for, like, hoping for the best, but preparing for the worst. Right. So anyways, that's like a breakdown of some of the numbers. That's like one specific policy that, it depends on how you fund it and set it up, et cetera. That's just an example. All right, so we get access to resources above and beyond what we put in. We can use the money for alternative care. I'm going to give you a specific example of that in a minute. Life experience. A mentor of mine told me a story of a client that he worked with that was diagnosed with, I believe it was cancer, given 6 months to live. They accelerated the death benefit in her policy. And instead of actually getting alternative care, she decided to travel the world with her family and create as many experiences and memories as possible. And that's just, I just having that control over your medical directive and being able to decide what you want to do and what happens like during that very difficult time. I think it's a beautiful benefit. I don't know how you could put a price on that. Right. So you can use it for life experience if you want. It also provides bankruptcy protection if you really think about it, because medical bills are one of the leading causes of bankruptcy in America, because it's really expensive to get sick, unfortunately, not to mention that you're not usually working during that time as well. It could be years before you get back to work, if at all. Like, what's the financial strain that's going to put on the family at that point? You not only have you lost income, but you're also racking up medical bills as well. That's not a good situation to be in as well. So what if we had a little bit of a cushion there to help prevent that, right? Because I've seen it, I've heard about it many times. If you just, the stats just show that the medical bills are a top reason for bankruptcy, right? So this provides a lot of cushion. I want to give you guys some examples, some real life examples here. The first one is actually a very good, a very inspiring success story. Chris Kirkpatrick, the owner of Life 180. good friend and mentor of mine. Obviously, I'm contracted with Life 180 as well. I love that. Love that company. Love Chris. He shares the story on his channel all the time when he talks about this benefit. His father-in-law, he was diagnosed with pancreatic cancer. This was 5 years ago, I believe it was. It is 5 years ago now. Given 3 months to live. Basically, when you get pancreatic cancer, that's pretty much a death sentence at that point. It has one of the highest mortality rates. All right. 5 years later, guys, I was actually able to shake his hand at the recent Life 180 event in Scottsdale, the Aligned Wealth Experience, and have a full-on conversation with him. He's doing better than ever. I think he goes golfing like 3 times a week and, spends a lot of time with the family, the grandkids and stuff. And it was because he was able to accelerate the death benefit on his whole life policy, and he was able to access over 6 figures of financial resources. I believe it was around 6 figures. It was a significant amount of money that he was able to accelerate from his policy to get the alternative care that ultimately saved his life. And I'll tell you what, I got to find it. I was actually watching a podcast with Chris and his wife, Hannah, who shared this story about the alternative care that the journey of alternative. Sorry about that, guys. Having a little fun with the internet. But anyways, what I was saying was I'll link down below to the podcast that they were sharing about the alternative care journey that they went through with his father-in-law, Hannah's father. And it was just really, really inspiring. And a lot of it was because a lot of what they were able to do is because they had access to all these financial resources because of this specific benefit with that they got from his whole life insurance policy. So this was just an incredibly inspiring success story, and just goes to show the power of these policies outside of any internal rate of return or infinite banking. All that stuff is fine, but this stuff, it literally saved this gentleman's life, and 5 years later, he's still alive now. It's just incredibly inspiring. Now, I want to share another example, a real life example. Unfortunately, this person does not have a whole life policy, and it's likely because we're not really taught to get one very early on. Like, what does a 40-year-old need whole life insurance for? Right? Just buy term and invest a difference. Avoid whole life insurance, right? You'll be self-insured at some point. Blah 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 blah. Whatever, right? But imagine if he had a policy like this, he'd have access to a lot of extra money potentially to help this care. So this is the husband of an acquaintance of mine, was unfortunately diagnosed with non-Hodgkin's lymphoma at the age of 40 years old. It's so sad and also just kind of mind-boggling. You don't really hear about that very often, right? You're not supposed to get cancer at 40 years old. Like that's just crazy. But we don't know when that's going to happen. It can happen to anybody at any time. Obviously, maybe the better you take care of yourself, the less risk you have. But even still, I've heard of people who take good care of themselves that still get sick, and you just never know when that's actually going to happen. Unfortunately, he did not have a policy. He's got to rely on health insurance, and unfortunately, also GoFundMe. I've seen it come up multiple times, and I always say, it's a beautiful thing to see the community come together and support this family. But it's also still very sad as well that if they had the right information, if you had the right information a long time ago, same thing for me. I would have done this stuff a long time ago if I knew about it. I just didn't. I was never taught about these things, which is why I'm sharing it now. But imagine if maybe he started a policy at 25, 30. Heck, what if his parents had started a policy for him as well? When we're kids, right? Like, it's so freaking cheap to do when you're young. Like, the younger you do this, the even more benefit we get, the larger these benefits will be. Like, imagine if the policy had 2-3 decades to compound, because the cash value compounds and the death benefit compounds. Remember, these riders depend, like how much we're able to accelerate depends on what our death benefit is. So if that's been compounding for 20-30 years, by the time we're 40 years old, we get diagnosed with this, we have significant financial resources at our disposal to take this thing head on, to deal with it. Right. But unfortunately, doesn't have a policy. He's got to rely on health insurance. So they basically dictate what his care is going to be, what they're going to pay for, what they're not going to pay for. Obviously, health insurance, important thing to have. But what if you want to get alternative care? What if health insurance stops covering certain doctors? They're not in your network or something like that. Right. It puts a lot of strain on how you deal with this. A lot of limitations, a lot of restrictions, a lot of red tape. And then we have to rely on GoFundMe, which is usually not going to be anywhere near sufficient. So yeah, I mean, what if you started the policy younger? What if we had this information early on? What if parents had this information and started a policy for kids? 100, 200, 300 bucks a month. You know, by the time they're 20, 30, 40 years old, we're talking about significant financial resources that they have access to. It's just so freaking powerful. And it's very frustrating to me that these things are not normally taught, because he could have, you know, the resources that he needs to get the care that he wants. Right. And also obviously protect the family from potential bankruptcy as well. So anyways, I'm going to go ahead and wrap up there, guys. Just a couple of final thoughts. You know, what if you know, like, this is a benefit you can't put a rate of return on. How do you what's the rate of return here on the peace of mind and control over what happens with your medical directive, your experience here? Like, if you were to get diagnosed with a chronic critical terminal illness, how do you put a rate of return on, like, in the example I gave earlier, you put in he's put in $69,000 over 10 years, but he could access $142,000 if he was diagnosed with a terminal illness. What's the rate of return on that? What's the rate of return on the peace of mind? What's the rate of return on protecting the family from potential bankruptcy and just having access to those financial resources? So whole life, dividend paying whole life insurance set up for high cash value, phenomenal asset for building wealth, especially in multiple layers and accelerating wealth building process. But we can't forget about the external rate of return that it provides as well. Because, you know, like I said, you can't put a rate of return on something like this, but it addresses a very potentially catastrophic risk and helps us deal with it much more powerfully, so, and much more strategically. So anyways, I will go ahead and wrap up with that, guys. I just wanted to touch base a little bit on this underrated benefit. It's not talked about a lot because, again, we're so fixated on rate of return and stuff. And I don't know, that just, in my opinion, shouldn't be really the primary determining factor of every financial decision we make. Should we consider it? Yes. But hey, just so you know, we have all of these other benefits as well. We're willing to give up a little bit of rate of return for that. In my opinion, yes, it's a no-brainer, especially since I can use my policy to make investments and build wealth anyway. So, all right, I'll go ahead and wrap up with that. Hope that was helpful, guys. What do you guys think? Drop some comments down below. Love to hear your feedback. If you have any questions, let me know. Make sure you take advantage of all the additional resources, tools, training, and stuff like that I have for you guys in the description about infinite banking, whole life insurance. I got all kinds of stuff down there. I got a free wealth building masterclass and lots of different masterclasses. Make sure you take advantage of that. All right. Talk to you guys in the next one. Hope you're crushing it. Matty S is out.